Guys, John Paulamy here, Actionable Intelligence. Today is Saturday, June 28th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual investment advice. Everything presented here is for informational purposes. Please do your own due diligence. It's your money. It's your responsibility. Okay, fund manager survey came out again from Bank of America. I'd like to look at some of the charts in there, uh, give us some indication of what's going on. When you see FMS, it's the fund manager survey. So this is the fund manager survey expectations for global economy over the next 12 months. And we see that a majority, or quite a few folks, are expecting stagflation, although this looks like it might have peaked. As far as a boom or Goldilocks, this is cracking around the bottom. And so one of the things I've said is that I think that things are not really going to be as bad as people think. And with all of the monetary interventions that are happening around the world, as you know, I track central bank activity for well over like 18 months now. The trend has been for the majority of the central banks in the world to be cutting rates. Okay, this is going to increase liquidity. This has a tendency to act as a stimulus for economic activity. Um, of course, the major central bank of the world that everybody focuses on, the United States, we still are not in a rate cutting cycle. I think that inevitably is going to happen at some point, but we'll have to see because for several reasons that we've talked about. I think there'll be space to do that with the inflation numbers getting somewhat under control. But I think one of the main things that's going to force everyone's hand is, as debt increases and rates stay higher relative to they were where they were just a few years ago, the interest burden on the federal government continues to go parabolic. And so I think at some point they're going to have to get rates down to try to, as they roll this debt. Debt comes due every week, and new debt needs to be sold because they're not paying this off, paying it back, and so it's just rolled. And if you're rolling it, we have seen indications that a lot of the debt was something like, or most of the debt was somewhere in the 2.5% range. I'm talking about all of the federal debt. Now it's starting to creep up into the 3 and 4% range because as the older debt, lower interest rate debt rolls off, you're having to refinance it at a higher debt or a higher interest rate. So I think that's going to be another catalyst. But regardless, I think that a lot of the fund managers are on the wrong side of the boat. Um, Not only do I think that it's just going to be rates going lower and higher liquidity. I mean, you have Europe talking about spending hundreds of billions of dollars on defense and infrastructure. You have China has been stimulating its economy. You have the United States with the big, beautiful bill, possibly slowly working its way through and eventually probably going to be passed. A lot of stimulus from that. And the fact that the United States is still running, 6, 7% deficits as relative to GDP. I just don't see how you're going to have recessions in that environment. However, inflation, of course, has to be watched. Excessive government spending can lead to inflation. We've seen. So I think that's where maybe some folks are looking in the rearview mirror instead of looking out the windshield. But I think that a lot of these people are the ones deploying capital. So I think that when I see these kind of divergences, it would pay sometimes to look on the other side and see if there is an argument to be made. And that's kind of where I'm at. So this is Purchasing Managers Index and global monetary policy stimulus. There's a direct correlation between um, rate cuts and PMI responding to that. Purchasing Managers Index obviously is a indicator of economic activity. And you see that as you cut rates, if you go back and look at least the past 25 years, as you see there's a lag obviously, but you see as rates get cut. Here's the cumulative number of rate cuts globally. over on the right side, you see that with a lag, PMI tends to increase. So, uh, do I think this time would be different? Probably not. And that's another indication to me that I think that economic activity is going to be picking up and surprise people. That's also, as we've shown before in other charts, I don't have it this week, but I've shown in other weekly reports where as PMI goes up, you can expect, obviously, that to be stimulative and positive in price for various commodities and resources, specifically energy, copper, things like that. This is also net overweight, underweight of global sectors. The sentiment, you see where overweight is in banks, insurance, pharma. Where are we underweight still? Energy, materials, things like that. So that's obviously where I'm focusing at because I think things are lining up. Things are shifting our way. We're doing very well this year in both portfolios. We have an emphasis in these sectors that are underweight with the most fund managers. And I think that based on what I've just shown you, with liquidity increasing, with stimulus increasing, with PMIs on the upswing around the world, that this will translate into a shift in capital towards materials and energy as we continue. And I think it won't just be, a couple quarter phenomenon. It'll be a several year phenomenon. So, of course, we like to buy undervaluation and sell overvaluation. So that's what we're looking at. I just thought this was an interesting chart that somebody put it on the internet or on Twitter. It's 5,000 years of interest rates, and you note that it's going back to 3000 BC. I don't know where they got all this data that shows the data points in here, but I just thought it was interesting. We had a bottom in interest rates during the Depression, okay, for obvious reasons, worldwide depression that we had, and then we had this big spike into the late 70s, early 80s. Then we had basically 40 years of declining rates in the financialization of the economy. Now we're seeing that start to shift now and move back to what I would say, if you draw a line across around between 5 and 6%, that seems to be the average, right? It seems to be where things level out. So when things overshoot to below the average, they have a tendency to overshoot and then try to find that, you know, equilibrium point. I mean, it wasn't, I remember quite easily, before the era of zero interest rates, when rates were, in the 5 and 6% you could get 5% in a passbook savings account in your bank. I remember as a kid, they would hand out, you would set up an account in your classroom in elementary school, and like your parents would give you like a couple bucks to start the account, and they gave you a bank book, and they taught you this savings, compounding, how a bank book, how you make the entries. They used to teach these things. They encouraged people to save and invest. Okay, but they don't really teach those things anymore. I've talked to a lot of people that are in the younger generations. There's no education about any of this. Personal finance, how to manage debt, what a credit score means, how to manage that, how to build wealth. No discussion about any of this. Okay, because it's just crowded out by, proto-Marxist, neo-Marxist, sociological issues. Uh, so I thought this was interesting. What I think is, the 40-year decline in rates is pretty much over. These things tend to go in long, uh, drawn out periods. So I don't think it's a short-term phenomena, particularly driven by what? Excessive debt. Okay. If you keep increasing debt on debt, and your interest is going up, and you are demonstrating that you are not responsible and you're not intending to pay this money back, and not only that, borrow even more money, then people are going to demand a higher rate of interest to compensate them, people that are loaning you money for that risk. And so that's why we're going to be trending higher, in my view, until they get to a point, I think, as Russell Napier has pointed out, where they're just going to cap rates, aka yield curve control, and just not pay people They won't repeat, but that's a kind of a debt repudiation, right? We're not going to pay you the market rate for the money you've loaned us. We're going to keep it artificially low. And if the inflation rate happens to be above what we're paying you, well, thank you very much, debtors, for your contributions to lowering the national debt as it relates to GDP. That's the scheme. So, anyways, I thought this was interesting, at least to show. So this is just a typical thing on X. People ignore this. This guy just got like 33.5 million views, and all he did was list from 2014 to 2024, a period of 10 years, interest cost on U.S. debt. That's went from 416 billion in 2014 to 1.3 trillion. Source, Treasury Department. Every year it goes up through different, all Republican and Democratic administrations, between Republican and controlled Congresses and Democratic controlled Congresses. Again, you have two certainties when you are looking at politics, okay? That you are going to have more debt, more spending equaling more debt, and more wars. That's it. That's a certainty regardless, okay? And it's not going to change until we have a radical transformation, until basically until this country hits the wall. But then you're at risk of the fabric of the union coming apart. And I've said that all along, that the entitlement programs and the debt are going to destroy this republic. But I'm labeled. I'm being histrionic. I'm being uh, out of control. It's the history of the world. All empires fall typically because they become over indebted and overextended militarily. What's new? Read history. But somehow we're the exceptional nation that's not going to happen to. I doubt it. This is why you need hard assets, because they aren't just going to say, "Oh well, shrug their shoulders, we give up. Here's the hot potato. Somebody else can fix it for us." People are in power to get more power and more wealth. Most of these people are not capable of getting any kind of power or wealth on their own from their own merit, so they get into politics. Okay, and so they're not going to give up power. They're not going to give up the free money that they make. And so this is going to continue until we hit a wall. And then, they're going to try to pull rabbits out of their hat through inflation, currency debasement, higher taxes, all things that are negative for prosperity. And so this is why you need to own hard assets. Why? Because the Federal Reserve and the Congress people up there can't just create platinum and barrels of oil and pounds of copper just by voting yes on a bill. Okay, the New York Fed can't do it on their trading desk, and so this is why, as you debase the currency, the way to protect yourself, one of the ways, is through hard assets. I see nothing changing here. I see nothing in place. Anybody can come on. I will host a debate if you can get on here and tell me how they're going to pay this, not even pay the debt back. Forget about that. That where you think the path forward is for cutting spending. We're not going to do it. It's a certainty. So this is an article that was on Twitter. I think people need to pay attention to this. Mexico is the largest producer of silver in the world. And the president there, Shine Bomb, okay, wink, wink, honk, honk, maintains Mexico's freeze on new mining concessions. Mexico's president, Claudia Sheinbaum, reiterated that no new mining concessions will be granted during her administration, particularly for open pit mining, continuing the freeze her predecessor, Andres Manuel Lopez Obrador, started in 2018. He said, quote, "No new concessions will be granted. That's it. There are no new mining concessions," unquote, Sheinbaum said during her Monday press conference when asked if the agreement and the halting of a legislative initiative to ban open pit mining implied a departure from Lopez Obrador's policy. And so as we enter a time frame, why is this important? Because we're entering a time frame where I think that we're seeing more and more interference in the markets. There are plenty minerals interference in the markets by governments, okay? A lot of the shortages and price increases that we're going to see for minerals around the world are going to be caused simply by policy decisions. There are plenty of minerals in the earth. There is plenty of oil and gas in the earth. However, because of ESG, left-wing politics, what have you, various countries that are endowed with these mineral resources are choosing, for political reasons, not to develop them. And so this is part and parcel of why I bring this up. Not to pick on Claudia Scheinbaum. She's just another politician that will go be a footnote in a history book at some point. But the fact of the matter is that I think that the upcoming or the current super cycle that we're at the beginning stages of resources, the primary driver is not necessarily going to be demand growth like we saw when China entered the WTO in the aughts. It's going to be supply constraints causing uh, shortages and causing higher prices. And so you need to be very cognizant of where you are putting your capital. There are a lot of, very interesting mining projects in Mexico. I don't think it's almost uninvestable, right? I mean, they're not going to necessarily, I don't think, shut down the existing mines. They just won't issue new concessions. Now, this could change if this person loses power after the next election, and it could be reversed. But currently, this is not, very good, considering the fact that silver, for example, has been in deficit for many years. And as above ground stocks get whittled down, no new investment being made because you've created an environment that's not investable, then you're not going to have, new supply. And uh, ergo, prices go up. So this is another reason why I say in many cases, don't, a lot of people want to buy that junior mining stock, make a ton of money, right? Yeah, I know silver, a lot of people are saying silver is going to go to 50 or 100. Look at the gold to silver ratio. If it goes from 100 to 60, and gold's at 4,000, then, silver should be $100. Yes, I agree with all of that. But what you need to keep in mind is, where are these primary silver mines? Well, a lot of them are located in these jurisdictions that are terrible. And so this is why I emphasize, for a lot of people, the best thing to do is just buy the physical metal, okay? To have a stash of the metal. Because if there's going to be shortages because supplies being constrained because of political decisions being made, then that's where you're going to get your price increase. You don't want to be investing in junior mining companies trying to develop, a mine in Mexico and then have this type of political environment that's going to make it, difficult or impossible. So here's a little chart shows, Mexico 202 million ounces of silver. This was in 2023. It's the largest producer of silver. Um, And, if these policies go into effect, obviously these are extractive industries. And if you're not investing new capital or having a mining friendly environment, then no new silver mines will be developed. And over time, depletion will assert itself. Yet, we don't even need to see demand go up. Demand just needs to stay where it's at. But as I said, as above ground stocks become whittled down, uh, you know, and you're not replacing, then are other countries here going to be able to pick up the slack? Likely not. Again, we've got, we talked about this back in late March, early April when copper poked its head above $5 a pound, kind of retreated, and now it's back above $5 a pound. There's been a lot of activity. It's kind of quietly done this. A lot of people aren't really talking about it. I suggested for a while that one of my favorite companies, I'll mention it publicly because it's a large cap mining company that I really like, that I think is going to do well during this super cycle, is Glencore. It's a very large mining company. They're very aggressive. They're very proactive, shall we say. They have big copper mining operations. They also mine coal. They are a company that has decided not to shed their coal assets. As a matter of fact, they have bought other mining companies' coal assets that they've shed just at the, which I thought was interesting because it happened right around what I called peak ESG. So we had this peak, you know, ESG uh, supernova during the Biden administration. It peaked during that, and now it's kind of rolled over. And Glencore was able to buy some tremendous assets from Teck mining. I believe it's the Elk River mining complex in Canada, coal mine. It's metallurgical coal, I believe. And so they're a very well managed company. They know what they're doing. And so, $5 copper is, and I think copper goes higher over time. As again, as PMIs increase because economic activity increases, you will see copper price likely move higher. How high, I don't know. I think eventually, I've heard, increased currency depreciation will also benefit it. So again, it's a hard asset. So this was from Bloomberg. It says copper faces historic squeeze with LME. It's the London Metals Exchange stockpiles depleting fast. One of the copper market's biggest ever squeezes is unfolding on the London Metal Exchange as rapidly declining inventories push up spot prices. Spot copper traded at $280 a ton premium to 3-month futures on Monday, hitting the highest level seen since a record spike in 2021. The huge spot premium, known as backwardation, signals a supply shortage, and it comes after a rapid drawdown in LME inventories over the past few months. Readily available inventories on the LME have declined about 80% this year and now equate to less than a day of global usage. So, I don't know enough about the inner workings of the LME and the historic uh, inventories and how that affects price, but I will say that I don't think you can go wrong by, again, being involved in companies that can profitably mine copper. And again, I just gave you a publicly traded company that I think will do well. It's a large cap. It won't go up 10 times, but in a context of a super cycle, it will provide market beating returns in my view. Here's a chart showing that exact decline in copper warehouse stock. Obviously, if the premium goes high enough, if the price goes high enough, copper will come into the market. Price discovery, low prices cure low prices, high prices cure high prices. So be aware of that. Okay, these aren't buy and hold forever investments. These things will rectify themselves. But, having various countries have various issues around mining and, nationalization of mining and taking bigger chunks of the economic activity generated by mining will, constrain it. I think these are talked about this before. A lot of these things are going to, I think, conspire or a confluence of events to cause the supply to be constrained going forward, which I think is going to be the main impetus for this commodity super cycle that we're entering. So we reported, I think it was last week or the week before, obviously the big announcement from the World Bank that they were going to lift the funding ban on nuclear power. Titled this slide, The Dominoes Keep Falling. Here's an article from the FT. Asian Development Bank considers lifting funding ban on nuclear power projects. Shift comes as stakeholders Japan and Germany pivot on atomic energy to meet growing electricity demand. Gee, who would have thought? So, Japan, it's the Asian Development Bank largest shareholder alongside the US, has dramatically shifted its position on nuclear energy. So again, more and more positive vibes, more and more positive news, more and more activity that should lead you to understand that we are in a long-term bull market for uranium. Um, Uranium price has really done well recently. Uh, the Sprott uh, placement of $200 million really lit a fire in my view, but things were happening well before that. I would be cautious because this is a chart of uranium ETF URA going back to 2022. And basically, it's a weekly chart. Basically, you have uranium stocks have traded up for a record 12 weeks in a row. So they probably need to cool off. They probably need to take a rest. But this is what can happen, right? Uh, Everybody was down on uranium. We saw this big correction in 2024 into 2025, lasting a year. Mm. Amount of activity on uranium FinTwit basically disappeared. Just the true believers were there. And this is exactly what happens. This is why I believe that in order to take advantage of bull markets, you have to get in as early as you can and just hold. Because if you miss this, well, you know, now you're higher than you were before the sell-off last year. So some people are good at trading. I'm not a trader, so I don't do that. But I try to buy things when they're cheap and hold them until, you know, as long as the trend and the narrative remain positive and remain consistent with what I thought they were when I bought the asset, then I will hold and buy on dips. But would I go running out on Monday and buy uranium stocks? Probably not. Are there still some cheap uranium stocks out there? In my opinion, yes. But when you have something that's up, basically 12 weeks in a row, you probably should let it rest. Relative strength is probably topping out. Can it continue to move higher for some period of time? Why not? I don't know. Anything can happen. But your odds are that you're probably going to see a pullback over some time. All that major news came out about that Sprott thing to really kind of get get the suck in some of the newbies and serial uh, shiny object chasers. So let the schlubs push this up. If you wanted to take profits, probably is a good time. If you're a trader, I'm not, but I'll be looking. I have my names, and when the prices look good, I nibble and buy more. So um, there you go. We're in a long-term uranium bull market. Uranium's going a lot higher, and this is going to, you know, this is going to be eventually. I think we'll have a blow-off top, and obviously the uranium bull market will peak at some point in the future, but I think it's a lot higher from where we are now. Do I think uranium can go to 150, 200, or $300 a pound? Yes, I do. I don't think sufficient investment has been made. All I continue to see is more and more demand be announced, more and more positive news, more and more reactors, but I just don't see the supply. I just see a lot of talk and a lot of estimates. The companies that are, like, for example, in the United States, we've talked about this many times, that are trying to bring brownfield projects, existing mothballed projects back online. It's been nothing but trouble. Are they starting to turn the corner on some of them? Yes, but then we had examples like Peninsula Energy that had to throw in the towel and cancel the contracts that they had with some off-takers. So you really got to know if you want to get into these individual stock picking, you really got to pay attention and understand which companies have the personnel, have the projects, have the capital to really do this. So something that nobody's talked about a lot recently is people, I think some folks are waking up to it. Something seems to be stirring in potash. You see the pricing there. This goes back a couple years. It's a daily chart. You can see that there was a period in 2024 basically didn't go anywhere. We had a breakout from this base, and then we have this declining wedge. So we'll be looking to see, it might be something to look at. Um, I don't own any of these stocks, but you know, I think in the context of an overall commodity bull market, that would probably at some point include agricultural stocks, soybeans, wheat, corn, things like that. Um, and I think that the various inputs, fertilizer inputs, this is another sector that's been kind of down for a while and ignored, may have some potential. I just put this chart up. This is the Mosaic Company fertilizer producer. Um, you see that this really has kind of broken out to the upside. Would I go out, run out and buy it on Monday? No, I wouldn't. But it's something I would track because when you have these breakouts, initially they usually pull back, right, and test the breakout. That would be the time, if it confirms and doesn't break down and it's not a false breakout, that would be the time, if this thing drops back to 31, 29, 30, something like that, gets its footing, then that might be the time to take your position. Nothing goes straight up, as we said, but this is definitely encouraging. So something to keep your eye on if you're interested in a sector, which I'm going to be looking at it more, obviously, interested in a sector that has been ignored and the potential to draw in more capital and move higher. But like I said, I wouldn't run out on Monday and buy this. What you do is you take notice of this. You understand that, okay, this thing has moved out, moved up. Why is it doing that? Well, because pricing looks interesting. And then, do you have to understand, is this going to reset to this higher level or possibly move higher, price of potash? And then what does that mean? Um, what uh, what's the amount of revenue for Mosaic that's attributable to potash? I don't even know the answer to these questions because I haven't looked at it in so long. So, but this is your time to go look at these things. Like I said, if this moves back down here over time, tests and doesn't break down and then starts to move higher, that would be a good entry point. So this is a chart for palladium. It looks like it's getting ready to go with its brother platinum. Obviously, we've talked about the platinum group metals. We're bullish on them. We've been bullish on them for a while. Price is confirming that now. Um, They have various ETFs that you can buy. There are some mining stocks. I'm not going to get into them again. Some folks, there's not that many. It's not hard to figure out what they are. You could do a quick AI search and there's like 4 or 5, 6 of these things. I haven't deep dove them. At some point, they're probably going to be, it might be good to get in as a speculation, but I don't know what their costs are. They're all in sustaining costs. They're just like every other mining company, though. At some point, if the price gets to a certain level, um, cash flow begins to explode, just like we saw in the gold company. So, are these things where, if your break even on platinum is 1400 all in, and, then you go 15, 1600, that's where your real leverage is with the equities. But that's a research that I have not done. I've just been buying the metal, uh, platinum, just dollar cost averaging, and feel pretty good about it. Like I said, you can buy coins, you can buy the ETF, and there are mining companies. Something that I think you should take a look at. Platinum group metals have gotten a lot of hype recently on FinTwit. The people that are the generalist, I think, contrarian investors, everybody's kind of on platinum group metals now. Um, so that might be an indication that it's short term, uh, not the place to be. But I think longer term, over the next several years, these go tremendously higher. So here's a comment from the OPEC Secretary General, quote, "There is no peak in oil demand on the horizon. Our projections are that oil demand will go and surpass 120 million barrels a day by 2050, unquote, OPEC Secretary General." So again, I think we've been proven right. A lot of people through the years have argued with me or thrown comments out that oil's a horrible place to be, energy's a horrible place to be because renewables, because EVs. It's just not happening. It's not going to happen. Even with all the trillions of dollars of investment in renewables, fossil fuels still represent about 85, 80. I think the uh, energy survey for 2025 came out. I think the IEA puts it out. I might have to go take a look at it, but I saw a blurb. Still, like fossil fuels represent like 86% of energy supply. So they're not going anywhere. They've been tremendously underinvested because of the stupidity and political nonsense that went on for the last 10, 15 years around climate change and ESG. And so that really retarded the growth in investment. People were scared, banks pulled back. Money just didn't want to go into it because it wasn't politically correct. And you didn't want to get chastised by some blue-haired moron that bought one share of your stock and then came to the board meeting and caused an issue. And then you had companies like Vanguard and BlackRock that owned, because they controlled so many ETFs and various investment funds that owned large percentages of these stocks, people like Larry Fink that were imposing their ESG mandates. Now that's all gone away. And that has really suppressed reinvestment. That's why energy is such a tremendous opportunity and why we're going to have large price increases in energy in the next several years, because you simply have to reinvest in extractive industries. And when that doesn't happen, at some point, price is going to go up. If demand continues to increase and you haven't invested, you're going to have supply shocks. You're going to have higher prices. So this is from GovCal Research. Somebody put up, says oil prices move against stock prices in a 30-year cycle. Roughly every 30 years, we see a new high of the S&P to oil ratio. And every time, 10 years later, we see a low for the same ratio. So the thing to do here is when this ratio gets up to this upper band, is to sell the S&P, or you should buy the S&P, or no, I'm sorry, uh, sell the S&P when this gets high, and then when it gets down to this low point, you should um, buy the S&P. So we're in a situation now where oil, I think, this is another, you've seen where it topped out in 1930. I don't know what the oil price was. I'd have to look at it, but you'd see that it goes, these cycles have maintained themselves. It's something to just, you don't just buy something based on one indicator, but I just thought it was an interesting indicator that looks like it's going to play out again. And why? Because of the underinvestment. Okay, these things go in huge, oil and gas and energy investing, or plants and equipment and capital investment projects, they're tremendously large numbers. They're in the hundreds of millions, billions of dollars. And so when price is down, there's no incentive to make these billions and billions of dollars of investment, but yet demand continues or grows, as we've seen. And so you start whittling down the excess supply that you created during the previous boom, to the point where, as the demand continues to just increase every year, you the supply, because of the lack of investment, just can't keep up. I mean, this is like common sense stuff. The cycles are long because the investments are so huge. And so when price does go up for some period of time, tremendous amount of money gets spent, and it fixes the problem for a period of time. You get into an oversupply, which then rinse and repeat the cycle. So I think that, it's just another indication, I think, of where things are going. Okay, this is the point of the time we will get into some social and political commentary. So if you're not interested in that, I would encourage you to sign off now. Okay, so I found this interesting. I've been talking about this volatility we're going to have in the developed world, in the US specifically, socially, economically, politically. And a large driver of it's going to be because of economics and the challenges we have of a bifurcated society where not everybody shares in the wealth, not everybody is a participant or feels they're a participant. Okay. Um, I'm not going to get into, I'm not a socialist. I'm not for forcing equity. But what I'm saying is that we do create policies, and there are instruments in place, not deliberately, but for the system to benefit those who are already wealthy or have assets, i.e., the Federal Reserve, i.e., too big to fail, i.e., um, state capture by corporations. These things, you know, I'm not here to change it. I'm not a advocate. I'm not a community organizer. I'm not a politician. What I'm telling you as an investor and a speculator is this is the way things are. Do I like it that way? No, I do not. Do I think it's fair? No, I do not. Is it going to change because I don't like it or you don't like it? No, it's not. Okay. So you have to look at things for the way they are, not the way you want them to be, at least when you're deploying capital. Because if you deploy it based on your feelings and how you think things should be, your returns are probably not going to be very good. And what we have in the situation here in the U.S. is a rigged system that's rigged by the establishment and elites. They don't exclude you from playing, though. You must know the game. You must know the rule. And if you want to sit back and complain about it or go throw rocks at the police, they can always hire enough police and National Guard to put these things down because the majority of people aren't going to go out and do that. Okay? And so, what I suggest you do, you can advocate, you can go protest, you can go write letters to your congressman, but you need to look at things for the way they are. And we have a bifurcated society here that's been created over many, many, from the beginning of this country. Forget about it. That's just the way it is. Okay. And so they don't exclude people from playing. You can understand the Cantillon effect, understand how the Federal Reserve works, understand how um, regulatory capture works, and you can play in that sandbox. Not as close as everybody else does, but to the point where you can still benefit. You have to understand that if you're investing capital. If you want to be a social justice warrior, if you want to save the world, Allah be with you. That's fine. God bless you. But we're talking about investing capital here and getting a return that beats the S&P. That's our goal here. So what we see here in the US is we have this bifurcated society where we have most consumers living paycheck to paycheck. This is some information on this. And you know, you look at the top number, that's live paycheck to paycheck overall. We have 68% of the people in this country living paycheck to paycheck. Um, the darker number at the bottom is live paycheck to paycheck with difficulty paying bills. That's 25% of the population. And then we have live paycheck to paycheck in the middle without difficulty paying bills. So we have almost 70% of the people in this country live in hand to mouth. And so then people wonder why we have this rise in socialism, neo-Marxist economic policies, why younger people are being drawn to this. Okay. Because it's a rigged system and they have no, Steve Bannon says they have no future in that system except to be like a Russian serf. Get some job, go into excessive student loan debt, go into credit card debt, can't get married, can't have a life. You're just a Russian serf. You exist to serve the system. But you can break out of that if you understand what's being done here. Okay. Now, I'm not just saying this is because the system's rigged. A lot of this has to do with personal choices. If you go into $100,000 in college debt, if you're still doing that nowadays, you're a fool. It's not, there's no payoff to that. I've had people tell me that were college graduates tell me, not just one, several, I wish I would have went into one of the trades like you did. Yeah, because there's a shortage of people that know how to do things that are necessary. The days of going to college, getting some degree in something, and then going and be a cubicle rat for 30 years at a company in a cubicle, and the company takes care of you and you just plod along, those days are over with. AI is going to rip through that like you wouldn't believe. All those people, a lot of those jobs are going to go away. But AI can't fix a clogged toilet. AI can't wire a house. AI can't, uh, put a sprinkler system in. So AI can't weld a pipeline. Now, will robotics continue to make increases? Yes. So you have to understand what's going on because it's not going to stop. The sun comes up tomorrow and things move on. But you're going to see more political and social turmoil, and this is what's driving a lot of this. People are mad and unhappy. It's not fun to try to live paycheck to paycheck and still fall behind. You're ripe. That's ripe pickings for ideologies and fixes that sound good on paper but have never worked. We're going to tax the rich. They have everything. You have nothing. Vote for me. I'll fix it. Where has that ever worked? But when you're desperate, when you see no future for yourself, when you've been indoctrinated and marinated for 12 to 16 years in neo-Marxist public school systems where they teach you this nonsense. Remember how I talked earlier in the presentation this week about how when I was even in elementary school, we had the we could still get 5 or 6% on a savings account in the bank. We had our little bank books and we put our little 50 cents a week in or whatever it was to teach us to be a participant in the system. I have people that I work with that I have worked with. Okay. I've told the story many times when I was a plant manager at a major utility, and they called me up from HR and said, "Hey, we did a survey of your people, and most of them that are working for you are not participating in the company's 401k program." Okay, what do you want me to do about it? We want you to, we're going to send you some material. We want you to talk to them about it because, they're foregoing, you know, I said, well, people have free will. They can do what they want. But, being a dutiful person, cog in the wheel, I did it. And then most of my guys in this wind farm that I had was running at the time, they were in their 20s. They weren't going to delay gratification. They didn't understand that time was their greatest asset, and they didn't understand compound interest. So I went above and beyond and explained all these things to them. That if you want to get ahead in life, if you want to build wealth, if you want to, people deserve what they get in life. If you delay gratification, if you invest prudently and let time compound, you're probably going to do well. If you don't delay gratification, if you get sucked in and have to buy stuff and then do it on credit, compounding works negatively too with interest, as we're seeing with the United States debt. So I gave the spiel. That was like about 10 people. They called me from downtown about 6 months later. Hey, did you give that speech like we told you and give that education? Yeah, I did it. What about it? No change. So people don't, you're ultimately responsible for yourself. I'm not saying this is just because of the system. This has had a lot to do with the free money that was given out, and people spent a lot of money, and they thought like Ralph Cramden on The Honeymooners. When I had it, I spent it, and then they get into that lifestyle. I've seen guys do that where we had, times were flush and we had a lot of overtime starting up a plant. We're working 60, 80 hours a week, and the guys are getting a ton of overtime. Guess what they do? They run out and buy a big truck. I say, guys, this isn't going to last. We're going to be back on 40 hours eventually. Get your lifestyle, be thinking about that. So what do? They don't listen. They go out and do stuff. They're full grown people and buy that, $80,000 truck, put a lift kit on it. They got this toy, they got that toy. Everything's on credit. As long as I can make my nut every month on payments, I'm good. They're not building any wealth. And then you go from working 20 or 30 hours of overtime a week for a year back to 40, and your income goes down by 40 or 50%, and you can't afford anything. Now you're in trouble. And one guy resorted to stealing from the company, and I had to fire him. You see, a lot of bad decisions are being made because people don't understand things. Okay. They don't, they're not educated. But in the end, you are in John's world, the way I have seen it since I've been around, it doesn't matter. You're still responsible for yourself. And if you think that going in and clicking a thing on a voting for some person that's telling you he's going to personally come down and kiss your life and make it better, you're a fool. It won't happen. It's never happened that way. The politician or the so-called leader will probably get what he wants. I mean, just read Animal Farm. All animals are created equal, except some animals are more equal than others. These people need you to get into power so they can get unearned power and wealth. That's it. Well, they're going to give me free health care. They're going to freeze the rents. They're going to go after those rich people out in the suburb, those white people. We're going to get their money. I mean, we're going to get into the person that says that running for the mayor of New York City. But what I'm telling you is, as an investor, this is a reality. We have a bifurcated economy for many reasons. A lot of things, poor choices people make, but also because the way the system's set up. Do I think going out and throwing rocks at the cops and walking around with a piece of cardboard stapled to a stick is going to change it? No. Thing's going to have to hit the wall and then do a reset. So, understanding how the Federal Reserve works, understanding what too big to fail means, understanding that there will be bailouts for corporations and the connected, but not for you. We saw that in 2008. Watch The Big Short. All the banks got bailed out. Remember Orangezillo, the guy that ran the one mortgage company? he had a fake tan worse than I think his name was Angelo Mozillo or something like that. They called him Orange Zillo. He had white hair and an orange face, looked like an Oompa Loompa, his face. He got bailed out. Remember when the banks got bailed out and they were still giving bonuses during the great financial crisis? Yet all these homeowners lost their homes, their lives were destroyed. There's several examples. They kind of show vignettes in The Big Short, where they go down to that community in Florida where those big houses where there's an alligator in the pool. The people just left like it was like Chernobyl, uh, Pripyat when Chernobyl blew up, where people just left in the middle of the night. All the furniture was still there, bills piled up, you know, they just disappeared because they couldn't pay the mortgage. And the one guy that was renting a house because he was in a good school district, he's rubbing his eyes, and the guy goes, "Hey, are you telling?" They knock on the door, and they're like, "Yeah." Telling me that my landlord hasn't been making the mortgage payments? Nope. You better talk to him. Something's going on here. Guy's been paying his rent dutifully, and the guy who got the loan in his dog's name wasn't making the mortgage payments. There's millions of stories like that. And so, you know, that's why I said we're going to have social political chaos because um, these people vote, and it's very hard sometimes to look in the mirror and say, well, I caused some of these problems myself. Yes, the system is what it is, but I need to understand the system. I need to understand this game. If you go down and sit at a game of Monopoly and you don't know the rules, how do you have any chance of winning the game? You can't just make your own rules up. This is what a lot of folks are going to try to do through politics and through voting. I'm just going to change the rules so they benefit my group. So this is where you're going to get the volatility. This is not going to be positive long term. This is why I keep telling the establishment and elites whenever I get a chance to talk to somebody, you can't just I got mine and pull the ladder up. Okay. It's a system that's rigged for your benefit. And understand this, the rich and powerful, I'm not going to use the word conspire, but they help each other to get more wealthier and more powerful. If you don't understand that, then you're just being naive. It's not like cabal rigged against you. That's what they do. I thought this was positive. Maybe we're starting to see some rays of sunshine from the efforts of Doge guys in the government. This is the personal current transfer receipts for Social Security. You see that this goes back to 2017, just ratchets up over time as more and more people retire, as the baby boomers retire. But notice this big drop since Trump's been in power. Okay. Um, it's the biggest monthly drop in Social Security benefits on record. Why? Because they're weeding out the fraud, waste, and abuse. Not people that actually deserve it, people that paid into the system, people that they're just making people come in and re-register and prove that they actually are alive and should get the benefits. Not going to illegal aliens, not going to, people that don't deserve it, didn't pay into it, or people that are dead and shouldn't be getting it, and their relatives are cashing the checks or whatever's going on. So this is, in my mind, some proof positive, and it'll be interesting to see how deep this is, if this continues. But they should be touting these things. Okay, this is the things that they should be touting because the media is aligned against this. They are pure establishment. They are the propaganda arm of the establishment. They're not going to come out and say, you know what it is. Again, who is against weeding out waste, fraud, and abuse? Well, people that benefit from it and the media that benefits from it. From the people, you're not going to go in there and say, well, Elizabeth Warren, what have you been doing? Chuck Schumer, you've been in there. Or Mitch McConnell, you guys have all been in Congress for 20, 30, 40 years. What were you doing on your watch? Well, they benefit from this. Okay. They're part of that establishment. Thinking that they're not is foolish. They're all in on it. But this was interesting. Charlie Belio guy, he puts out good charts. Auto insurance rates are up 96% last 10 years. Another thing that the strip mining of the U.S. consumer. Um, but look, this is what I'm saying about understanding the game. Are you going to be able to go out what are we going to do? Cap insurance rate increases, have the states do that, politicians do that based on what? What we should do is making sure that we remove impediments for competition so we can get as much competition, make sure there's no collusion going on, things like that, and then let them have it out. Okay. But why this big increase over time in rates? That would be interesting to understand that because it's exceeding even the inflation rate. Now you look at what the S&P 500 has done during that time, 231% it's up. And why do I show that? Because Progressive Insurance during that time is up 1,230% their stock price. So a couple of ideas here. First of all, insurance is a very good business if it's done correctly, if you're able to mitigate your risk. Number two, pricing power can translate into great increases in earnings and cash flow, which is good for the share price. And also, this is what I say. What about, I'm not going to be, shop around. Yes, you should, but, this is what you should be looking for. This is the game. Okay. Instead of crabbing about it, you would have been buying shares in Progressive to mitigate the rise and increase in insurance rates. And why you need to be an investor long term. Because look, the S&P, this is just one example, is up 231% over the last 10 years, which you got to stay ahead of inflation. This is just one part of obviously CPI. But I'm saying this, that's why you need to be an active investor because you have to stay ahead of inflation or you're going to lose ground. You're going to be these people that are living paycheck to paycheck, have no wealth, are Russian serfs, and, don't understand how this works. Even if you put money, $5 a week, even if you have to start just by putting it into an S&P, low cost S&P Vanguard fund, over the last 10 years, you would have at least stayed ahead of inflation. Those dollars didn't get inflated away. You were able to run ahead of inflation. You were able to maintain and increase your purchasing power. And if you were wise enough to figure out how insurance works and what a great business it is, if it's run correctly, then you could have, 10 times, 5 times the S&P and 10 times the effect of those rising auto insurance rates. Instead, most schlubs and the serfs that believe in democracy will run and say, well, somebody do something, pass a law that they can't raise rates. I mean, I explained this last week. We talked about, the Obamacare, and everybody was touting it, and everybody was all happy, and and Joe Biden, whispering into Barack Obama's ear when he signed it, this is a big effing deal, got caught on the mic. Yeah, it was for the health insurance companies like United Healthcare and some of these other ones. Look at their stock prices since Obamacare went in effect. That's who that bill was written for. It wasn't written for you to lower costs. It's very easy to understand why insurance uh, rates keep going up, health insurance rates. But the average schlub, shoe salesman, doesn't have a clue. And so you keep electing these politicians that are going to save you and do something for you, and that, they don't listen to you. They give you lip service. They do whatever people that put money in the sock tell them to do, and that is not you. And yet you continue to go vote and continue to hope beyond hope that maybe if I just vote a little harder this time, they'll do what I want them to do. It's just beyond naive. It's just dumb. You're dumb if you believe that. You're stupid. And you're not going to make it. Perfect example. Our friend Zoran Mamdani. We already have two examples of major cities, the three major cities in the U.S., New York, Chicago, Los Angeles. Two of those three are currently being run by inept, incompetent neo-Marxists, and you see the results. I mean, I know people are going to come on here and say it's not as bad as you think. You don't live there, yada, yada, yada. I'm not the one that dubbed Chicago Chirac. I mean, all the deaths that go on there, the shootings, the gang warfare. I'm not the one, when I was I had to go to Anaheim a couple years ago, and I was just shocked, to go to a solar convention. I was just shocked about all the homelessness I saw, and just place looks like a dump, LA. Okay. Then you see all the other mismanagement going on, nonsense, stupid policies that make no sense, things that are not mainstream American, that are just specific to these havens of left wing. So you have these experiments. You have these experiments in governance, and we can see. And so now we have, the largest city in the United States, the most uh, wealthiest, I would say, New York City. And so they have a lot of problems, obviously. And so this is what I'm talking about, the political volatility. You have this younger crop of democratic socialists. I know people like to make fun of these people, but you should take them seriously because they are very good politicians. They are very good about exploiting people's anxiety and fear and sense of helplessness, and the fact that people don't want to be Russian serfs. Remember, I just showed you the chart about 70% of people that live in hand to mouth. That's these people exploit that. Okay. So this is from an article written by a guy named Francis Melton. He's an attorney. He's retired, I believe now, but lives in New York City. He writes a blog called Manhattan Conservative. I interviewed him a long time ago when I used to do interviews. He's a pretty cool guy. I like his site, but he lives there. He's very switched on to New York politics. I don't know why he's still living there, but he does. But this is from his article, and this is kind of an introduction, and I'll just give my comments afterwards. Probably you have already read enough about this guy to know just how crazy and ignorant he is. If you haven't yet studied up, here is a small sample of his stated positions. Free transit buses for all, free child care for all children 6 weeks to 5 years old, city-owned grocery stores, a rent freeze on all regulated apartments, vast expansion of city-owned subsidized housing, building on the success of the New York City Housing Authority, exclamation point, because he's written extensively about what a disaster that is. Quote, cracking down, unquote, on landlords, plus some kind of a mental health intervention corps to intervene with violent criminals in lieu of police. All of this to be paid for by, quote, taxes on big corporations and the wealthiest New Yorkers, unquote. And of course, quote, globalize the intifada, unquote. This guy founded the Students for Justice in Palestine chapter at Bowdoin College. So again, first of all, people need to understand that he won the Democratic primary. What is typical is the person that wins the Democratic primary typically wins the election. However, he they only had 30% turnout for this primary. He won 43% of the vote, I believe. He was running against Andrew Cuomo, arguably the worst governor in the history of New York. I'm not going to get into his story, who didn't even run a campaign. He just tried to run basically on name recognition. And obviously, Eric Adams, who's been a nothing but a disaster, who has, I believe, left the Democratic Party and is running as an independent. And so there's like 5 million registered voters in New York. This guy just got about 1 million votes for this primary. So that's not guaranteed that he's going to win. As there's still time, and I think there's an opportunity for people to vote somebody else in. However, what's interesting that Mr. Melton talks about further in the article is there's been no repudiation of this guy's views. Chuck Schumer didn't come out and advocate for him or endorse him, but he did praise him. Just like Jerry Nadler, who's Mr. Upper West Side, Upper East Side, whatever. These are both Jews, and they both, were giving this guy high praise, however, short of endorsing him. But this is the future of the Democratic Party. These younger, more zealous, true believers. Um, I don't necessarily think they believe all the stuff they say, but I believe that they think it will sell and get them into power. AOC didn't believe all this stuff. She was a manufactured candidate, and she, at the time when she was running and still out there, she has a big following of young people. She's hip, she's cool. She's, some people consider her attractive, and so people like that, and they say all the right things, right? Just like this guy's talking about, he's going to go out, and tax the white people to pay. And this is what he says. So I don't know what this guy, if he's going to win or not win. I do know that we already have two failed experiments in two of the three other largest cities. In my view, they're failed experiments. So it's very, very easily believed that, why not win? This is the future of the Democratic Party, and it's repulsive to the majority of people in this country. Okay. I'm, you know, there is no Democratic Party of what my dad was in his generation back in the 60s and 70s was labor based, like they had in Minnesota, the Democratic Farmer Labor Party. It's completely swung to the far left. It's a party of grievance and envy and neo-Marxist ideologies that have never worked. But it appeals. It appeals to people. If 70% of the people and 24% of the people are living paycheck to paycheck, and the 24% of the people are living hand to mouth and falling behind, it's going to appeal to them. Here's somebody that's saying that, you know, the reason that I'm in the situation I'm in is because of the greedy people and the system. And he's going to come in and he's going to fix that system and he's going to make my life better. He's going to give me something for nothing. This is nothing new. This is historical. All throughout history, there's been charlatans and people have come along and want to reorder society with the idea that, as Bastiat said, the idea that you can live off your neighbor free. It's just not possible. In order to do that requires levels of violence that we have seen, if you read the Black Book of Communism, can lead to tens of millions of deaths because people will resist this. It might float in New York City for some period of time or Chicago or LA, where you have tremendously left-wing politics, but it's not going to fly in the majority of the country. This is your Democratic Party. The old guard is on its way out. It's not going to repudiate this. These people are on the march. Okay, this vanguard, if you want to call. I'm starting to use these, you know, Soviet, images and nomenclature, the vanguard of the new, younger, more democratic socialist. We're going to fix things. We're going to have to fix things, and we know how to do it. By what? Instigating new policies. Get rid of all the graft. Get rid of all the long-term politicians. Nobody wants to do that. These people want to be in power just as bad as the people that are in power. They just want the hands on the wheel so they can have, power and unearned wealth. It's nothing new under the sun, guys. So we don't know what's going to happen. In my opinion, I'll say this, and I like to throw some provocative. This guy's been in the country 8 years. He shouldn't even. If John was king for a day, this guy wouldn't even been allowed in the country. He would have never allowed to be immigrate here. I would never allow. He's been here 8 years. He's a citizen, okay, and he's anti-American. He's not saying things that are consistent with my values and a large majority of the people here. But yet he's here, and he has a potential of becoming mayor, only in America, I guess. So Allah be with them, and we'll see what happens. But you know, you should pay attention because these people are going to inculcate themselves in the Democratic Party, and they're not being repudiated by the National Party, and they can't repudiate them. This is a very vocal. It's not the majority, but it's becoming bigger and bigger part of the Democratic Party. This aggrieved, envious class of people who, for whatever reason, aren't where they want to be in life. And instead of, there are some true believers, people that want to fix things. But, following failed socialist and proto-Marx or neo-Marxist policies has already been demonstrably not going to work. The way to deal with violent criminals is the way you deal with a rabid dog. You use levels of violence to subdue them, prosecute them, and lock them up for long periods of time, thereby removing the threat. Okay. You don't reason with a rabid dog. You take a pistol and shoot the dog and kill it, puts it out of its misery and keeps it from biting people. I'm not advocating shooting people in the street, but you know, you're dealing with violent criminal. It's a mindset. I'm going to send some social worker out there and, you're robbing a bank and the social worker is going to show up and they're going to have a dialogue about, what kind of nonsense is this? Okay. The laws are there. It's antisocial behavior, not interested. Most average person, you know what? They don't want to be assaulted. They don't want to be raped. They don't want to be robbed. They don't want to have to look over their shoulder. They don't want to live in fear. And so the way you do that is bring levels of violence, whatever's required, and long prison sentences fixes these problems. Of course, they don't like it. Okay. But this is what is required. Okay. And taxing people wealth, guess what what the wealthy will do? Like they've done everywhere else that we demonstrated. Okay. They leave and go to places like Florida or Tennessee, or South Carolina, or Texas, or wherever. And then tax base shrinks because people are living hand to mouth, don't have any money. So how are you going to, have 100? This guy's going to potentially become elected. Remember, I believe the city of New York has $100 billion a year budget. This guy has no executive experience at all. What do you think is going to happen? Would you, this would be like saying, taking this guy, saying, what would happen? Let's use an analogy here. What would happen if Zoran Mamdani was made the CEO of ExxonMobil and had all of his democratic socialist, neo-Marxist views, and he was going to apply them to corporations? The stock would crash. Well, what do you think is going to happen to New York City? This is what's happened to LA and Chicago. They're becoming, uninvestable. Quality of life goes down, and people go, "Gee, how did this happen?" It's our people, but the people are marinated in these ideologies. They actually have been told since they were in kindergarten that this all will work. We just haven't done enough of it. We haven't done it the right way. You know, the Soviets didn't get it right. The Chinese didn't really get it right. The Eastern Bloc countries didn't get it right. All the revolutions throughout Africa and Latin America, they didn't get it right. But Zohan Mamdani, he's our man. He'll get it right. I mean, like I said, it's beyond naivety. It's dumb. So that's all I got to say about it. We'll see what happens. We'll follow it. It's just going to end up like it always ends up if this guy gets in there. Maybe he'll temper and become pragmatic. Who knows? But like I said, this guy shouldn't even be in the country, in my view. But he is. No one cares what I think. So we'll see. That's it for this week. Appreciate your patronage. Appreciate listening. And we'll talk to you next week. Stay safe out there.